All right, so you're looking at June 2016, paper 2, looking at the partnership question from this paper. Mentive and Marino have been in partnership over the last year. Their partnership agreement includes the following: interest on capital, interest on drawings. Other than the rate at which profit or losses is to be shared, name two other features that may be included in a partnership agreement. So apart from the profit and losses, we could look at the capital contributions. Just get my pen. Um, right, in a partnership agreement as well, we could also look at actions to be taken if a partner retires or dies. Right? They could also look at actions to be taken on the admission of another partner. Right? Other things would include interest on drawings, interest on capital. All of these should be explicitly stated in the partnership agreement. Part B, since the partnership agreement of Mentive and Marino is silent, what rate should be used to share the firm's net profit or losses? So they should be shared equally. Right? So Mentive and Marino, who contributed capital in the amount of 120,000 in the ratio of 7-5. So that's an important piece of information there. So let's highlight that. Right? Capital in the ratio of 7-5 for Mentive and Marino. So that meant that this guy did 7 parts and this guy did 5 parts. 7 plus 5 is a total of 12. So he did 7/12 and this person did 5/12. The net profit before interest was $77,404. There's a long-term liability with a 6% loan and the interest has not yet been paid. Right? Drawings, Mentive 3600, Marino 1920. They want us to prepare profit and loss appropriation account for Mentive and Marino for the year ended the 31st of December 2015. So let's go talk about part C first. Now, before you get into the actual write-up or the actual account, appropriation account, what we need to look at is our working. Right? Now, what are the items that we will need to include inside of our appropriation account? So appropriation account would have a net profit. Start from the top. Now, there's an adjustment to be made to the net profit, which has to do with the interest not yet paid. So the loan interest is at 6% of the loan. So if we take our loan of 41,000 and we multiply that by 6%, let's pull up the calculator and see what I'm going to get there. 41,000 multiplied by 0.06. We're looking at $2,460. Right? So the net profit has to be $77,404 minus the 2,400, sorry, and $60. Right? That's where I works out to be. 77,404 minus 2,460. $74,944. right? So that's one piece of information there that we need to deal with, and we dealt with that. So this figure, we're going to replace it with a 74,944. So I'd encourage you to do this working maybe on the side of your paper and adjust your figures accordingly. The next thing is interest on drawings is another part of the appropriation account. Now, I need to know your format of your appropriation account so you'll know what are the things you're looking for. Interest on drawings is said to be at 5% per annum, and they provided us with drawings here, right? So we're looking at 5% on this and 5% on this. So we can make a note of each person here, Mentavere. We're doing 5% of 3,600. That works out to be 0.05 multiplied by 3,600, 180. And then Moreno is 5% of 1920. That's $96. Right? Next, we need to talk about things like interest on capital. They give us interest on capital at 10% per annum. Now, it's 10% per annum. And remember, they mentioned here that capital was contributed 120,000 in the ratio of 7 to 5, right? So multiplying here by 120,000 Mentavere, divide that by 7, 12 parts, sorry. Multiply by 7, 120,000 over 12 by 5. Right, so 70,000 by 10%, that's $7,000. And 10,000 by 100,000 by that, 50,000 or 10%, that's 5,000. This is the interest on capital. Yeah? So just to recap, the $120,000 is made up of 70,000 from Mentivere and 50,000 from Marino, right? I'm dividing the 120,000 by 12, and then I'm multiplying by 7 and 5 respectively. The interest on capital is 10% of that amount. So this is why we have 7,000 here and 5,000 here, right? Now, the question didn't say anything about loans being paid to any of these people. This is usually what would follow after we do interest on capital, after which you get to the share profits. Now, we did say that it was silent on the share profits. So it means that we're going to have to share profits and losses equally. Yeah? 1 second, guys. Right. So it was silent on the share of profits and losses. So we said that it will be shared equally. Right? Now we have everything we need to do our appropriation account. Now, the approach we should always take when we're doing these questions is we need to spend some time and get familiar with the question, do all of our working first, and then we begin with the actual account that we need to prepare. So we are preparing the appropriation account. I want to use this little space that I have here to head it up, I'm going to put the name of the two partners, Mentive and Marino. Right? We're going to head up profits and loss appropriation account, or I'll just kind of, because of space, I'll write it on until the end, then 31st of December 2015. Right? I'm gonna use two columns. I'm gonna start with my net profit. Now remember, we had an adjusted figure for net profit. What you may want to do, depending on space allocation, like the adjusted figure or the adjustment we did for the profit, you could show you working right here. Right, remember, you'll be writing in the booklet. So all of this working that I have here, you might need to kind of do it at the side of your paper or behind the paper. So on the answer itself, you might want to show your working in a little bracket here, right? So the examiner is going to see how you came up with your figures, right? Now, after we do net profit, we're going to do add interest on drawings. We add an interest on drawings because this is an income generating activity in our partnership, right? We're charging this to the partners, and this is going to compensate the partnership for money that the partners took out of the business. Right, so Menteve, Mourinho. Again, another bracket. I could just put more 6,600 multiplied by 5%. 1920 multiplied by 5%. This is not going to take up too much room. Right. Now, I'm using this last column here as more totals or summation column. So as I calculate the interest on drawing, so each of these partners here, I will find the total of it, 180 plus 96. That's a total of 276. So this is going to be added to my net profit. Right, if I add that, let's add that. Let me see what I get. Plus 74,944. We're getting a total of 75,220. From this, we want to subtract our interest on capital. Right, and we have Mentive, Mourinho. So here I would just put the capital amount, 70,000 multiplied by 10% and 50,000 multiplied by 10%, right? We'd have done our working previously to establish what the capital contributions will. Right, now this figure is going to be subtracted from a total above. We don't have any salaries, so I don't need to include any salaries here. I could just go straight ahead on subtract this. 5 take away 2, give them a 3. 7 take away 1 will give them a 6. From this point, I could go to more share profits now. Now, because it was silent on the share profits, we said that we will be sharing things equally amongst the partners. Right? So we could write here half of 63,000 . 63,220 divided by 2. 31,610. 31,610. We write it here in our second column and then carry across the total, which is 63,220, and we'll draw double lines. Okay. Yes, and this should be our profit and loss appropriation account for year ended 31st of December 2015. Now, there's other part of the question here. Let me sort out a bit so you could see it a little better. So I'm gonna just grab this and head down to the bottom here. This is the other part that we're gonna work on now. Other account balances recorded from Mentive and Marino as follows. They have fixed assets, 220,000, current assets, 18,000, current liabilities, 48,576. Prepare statement of financial position as at the 31st of December 2015. For Mentive and Marino, showing clearly the firm's working capital, details of each partner's earning in the capital section. No, they did not provide us with any current account balances, right? So we are going to have to show that in our balance sheet. All right, so let's start by heading up. I'm gonna do this adjacent to the question here. So again, Mentive and Marino, they're doing a statement. Financial position. As at 31st of December 2015. We start with our fixed assets. Here we could use two columns. Again, it's a simple statement of financial position. So you don't need as many columns as we usually would when we're doing the sole trader account. So you have 220,000. They want us to clearly show the working capital. So we'll list our current assets at $18,000 less current liabilities. Right, this is how we find our working capital, 48,576. The difference between these two is going to give us our working capital. Here we're going to have, but the result going to be a negative figure, which usually is a bit of a concern. Means that the company would have some challenges meeting their short-term debt obligations. So the difference between these two, 30,576. 30,576. This is our net assets. We still have to record this figure, and then there's the loan, right? Again, we had that loan. $424. Have long-term liabilities. Right, so this is why we need to kind of identify some of these things. We have this loan here, 41,000. So that has to be shown as part of our liabilities. Now, remember our accounting equation, assets is equal to capital plus liabilities. The statement of financial position is basically an expanded or elaborated version of this formula. So if we move the liabilities across on this side, long-term liabilities, you have to subtract that figure from our net assets. So we have 41,000. How's the figure, right? 41,000. Yeah, 41,000. So minus 41,000, 148,424. Right? Finance by sectional. So we have capital. We could do this and put Mentive and Moreno. Mentive we know is 70,000 and Moreno is 50,000. So that's total of 120. And then we have the current account. Now, we had no opening balances for Mentive or Marino. Right? This is where we might need a bit of split in order to work out different balances that we need to carry across. Right? Good. So we don't have any opening balances for these guys. Usually if we do, we would include the balances here. That was not the case. Now we're going to have our additions, things that will increase their investment in the business. That would include things like interest on capital, salaries, which are none, and share profits. So for here, we may have interest on capital, share profits. I'll still write the salaries just in case you're revising. You need to know your format. So the interest on capital, we're getting this from our, this here we could label this the fixed capital, right? We're getting this from our appropriation account. So the calculations we did for interest on capital was 7,000 and 5,000 respectively. 7,000, 5,000. And then we had that figure of share profits, 31,610. Right, these are all our, we have no figures here for salaries. If we add this, you're gonna get 38,610, 36,610. And we're gonna have things like interest on drawings and our drawings as well. Right? So we were given drawings of 3,600 and 1920. 36 and 1920. Right, and interest on drawings was at 5%, so we got 180 and 96. All right. So the finance by section, what we did is we're gonna just complete these by subtracting the drawings and the interest on drawings. We calculating our balances, closing balances for our current accounts. We find the sum of these two and we're gonna bring it to our total column. Right? So the fixed capital 120,000 plus the current account balances giving us a total of 189,424. The total of our fixed assets and our working capital works out to be 189,424. And that's going to give us our balancing figure. I did not include for this part because they specifically stated that they recorded these balances and they didn't include the loan at this point. I did not bother including the long-term liability of the loan. Right? And we balance in with these figures as is. All right?